Markets are bleeding. Pundits and retail are scared. Everything does appear to be rolling over right now. I'm going to do a lightning round of some stock analysis for companies that reported this morning, as well as some companies that are reporting right now. AMD, there was room for this to go higher, but like a lot of things, it doesn't matter whether we're seeing companies beat revenue and beat earnings per share. It seems like smart money wants to lock in those gains. And we talked about the catalyst. Obviously, a China-US trade deal is in the works and could change the sentiment of the market at any given moment, as well as the NVDA earnings, which are ahead of us. But the rest of big tech has reported, and they're coming up off of those highs that were hit. And I'm going to be doing some videos this week. I don't want you guys to miss analyzing what type of percentage pullback is expected from big tech if we continue to pull back. As I've said, we had a great Q3 earnings season. We're still in the middle of it. This is a huge week for reporting, but if we do begin to largely pull back and go red and continue to bleed, there's going to be a strategic opportunity to buy again. Stuff is falling quickly. Some of the more high risk plays like the quantum computing stocks and some of the AI small cap stocks, they're already pulling back to a place where they look attractive again. And so I highlighted in the Stocks with Josh Discord today that USAR has had an incredible topple and fall off of its recent high, but it's $1 away from an ideal place to potentially take risk again. So we got to follow the charts. The charts are red right now. AMD is reporting and the stock price is crashing at the moment. And so I just want to have a lot of you consider pumping those brakes on trying to buy the dip too early. We are going to be looking at the S&P 500. We want to see a reasonable 10% correction. A 10% stress test on the AI story would be extremely healthy. And if the market is bullish, I'm going to give you a clue as to what might happen. We're going to see a really fast drop. It's not going to take days and weeks. If the market wants to lock in some gains and sell out of their position, we'll see a fast drop, right? And then we'll get back onto the bull run. And so I don't think this is going to drag out for a long time. We're going to get a stress test, and then we're going to see if smart money wants to buy up the dip again in 2025. I don't really see that anything has fundamentally changed. So I don't see why the AI story has to come to an end when a lot of big tech earnings went really well. All that happened is that there's some profit taking, and Wall Street wants to get all of this at a better price. And my main stress or warning to all of you is don't buy the first red candle. We're going to follow the charts. We trade the trend. Right now, the trend is showing a pullback. We trade structure, we trade momentum, and we trade volume. We're going to be watching all of that. I'm going to go through some of the companies that reported earnings this morning. I'm going to give you some potential buy targets for them, and we're going to cover a couple that are reporting right now this afternoon. Welcome to Wall Street. This is the Stocks with Josh show. Appreciate the hearts in the comments. I appreciate those who take a minute and hit the like for me. If you need help navigating Wall Street's stressful days like today, then hit the like and subscribe to get the next video. Now, we have been on a very successful run for picking a stock of the month. I've largely been picking it on the first day of the month, and we have seen each and every month a greater than 100% profit. But I want to warn you, we get that 100% profit, and you want to lock in that 100% profit, and you can't come tardy to that party either, because once that move's occurred, if you hear me talking about it, well, I might be cashing out. And so we saw PayPal, we saw Google and Amazon all do extremely well last month. Now, I do have something in my sights that I'm looking for as a potential pick for the month of November, but until everything stops bleeding, I need to see some green. I need to see some turnaround. I need to see a little bit of bounce. I'm not going to give you that play, but I will tell you what it is early I'm not calling this as a buy right now, but I like the pullback that I've seen on Netflix already. I believe it has a little bit more room to go to the downside, which we saw today. I want to see it hit a couple targets that are below us now. And as we get closer to NVIDIA's earnings, we might see a turnaround, and this might come up off its lows after the majority of the pullback has already occurred. Market was pricing in some fear. The market was pricing in some drama surrounding Netflix, but they're raising their prices, they're growing their market share, and the company still looks very, very strong. Going into 2026, it would not shock me if Netflix had a $1,500 stock price. But hold for now. I'll let you know when it's go time on Netflix. All right, let's talk about some of the companies that have reported earnings. I'm going to go through this very quickly. There's 4 of them. One of them is going to be Uber. And yes, they beat on earnings per share and revenue, and the stock dropped. Why? Guys, in 2022, the stock was $20. And right here this month, the stock was $100. Absolute incredible move. This is just profit taking. The golden pocket for Uber, and you say, what are we talking about? Well, we're talking about a fib trend line that when something hits a pivot top, normally the pivot low is found in the golden pocket. For Uber, that's around $50. Now, some of you might think that's way too low for Uber to go. It might be. I see support around $70 as well, but I'm just going to go through and give you guys some extreme conditions that these might pull back to. I also see bearish divergence on the MACD and the RSI. And then another one that reported earnings this morning was Norwegian Cruise Line Holdings. This thing was up 106%. So the stock doubled from the 52-week low to the recent 52-week high. All right, so this is just profit taking. Now, they had beat on their earnings, but they missed on their revenue expectations, and it appears that demand has slowed. This is after the post-pandemic travel boom. Right now, analysts are expecting that slowdown to continue for a while, and so the stock is probably going to continue to come down. I see a historic support line between $18 and $16. This is one that I have swung trade well many times, and it's always paid to buy the pivot low because it's been trending up for a long time. It's still way off of its pre-pandemic highs. And so I think that as it continues to demonstrate good revenues and profits and continued growth, I believe this thing can get all the way back to all-time highs in the next 5 years. And then you've got Spot, which is up 108% from its low to its high. This is another company that's had an incredible run since April. A lot of good was priced in. They beat profit expectations. They plan to raise their prices. They've demonstrated their ability to grow market share, but the stock had already been up 40% so far in just 2025 alone. Wall Street sold the good news. The golden pocket for Spot is between 477 and 464. I'm expecting more pullback. And then we've got Shop. This thing was one of the biggest winners. It's up 166% from its 52-week low to its recent 52-week high. They had Q3 revenues that topped expectations, and they gave strong forward guidance. Matter of fact, the CEO came out and said, shoppers keep buying. He said, they keep returning, and demand remains really resilient across channels and categories, which describes that there's really no slowdown or weakening of the consumer. But despite that, Wall Street said, yeah, that's great news, but yeah, we're going to lock in our profits right now. You're up 166% in a relatively short amount of time. Key support on Shop is closer to $150. Now, I'm giving you some more extreme pullbacks, but I want to give you a little bit of a wake-up call because, as I said, we don't want to buy the first red candle just yet. We'll come back around and identify when Wall Street begins to load back up, because that will be found in the momentum shifts and turns and the volume. But right now, the momentum is rolling over. And then tonight, AMD. Okay, these guys reported earnings, and as I look at the chart to my left, the price is red and precipitously falling. But let's keep things into perspective. This company had its best month in the month of October in the history of the company. The stock overall since April has gone up 250%. So at some point, you got to lock in gains, no matter how much you believe in the AI story or the opportunity ahead. And that's all that Wall Street is doing. Again, we have a pivot high. And I want to show you the AMD chart because I want to make a point about what I'm expecting and where this could possibly go. Let's go look at AMD. I just want to point out that AMD is in an ascending channel. And I just want to highlight that these are clear pivot highs, pivot lows, pivot highs, pivot lows, and this is very clearly a pivot high. Even if we had a reversal in the next couple of days and managed to still come up to this 287, this is clearly a strong pivot high range. What I'm going to be looking for and what would be a more attractive buy for most investors would be to see this come back to the middle of this range. Remember, the top half of a channel belongs to the bulls, the bottom half belongs to the bears, and the middle is where I would likely see some form of a bounce. That would put AMD all the way back to $200. Now, that's not a prediction. Remember, nobody liked this thing at $110 down to 100, down to 90. I called this out. I did shows on it. And when it continued to drop, people said, you're wrong. This isn't a good company. They suck. NVIDIA is the way to go. But of course, it had the very best month of October than any company. Like I said, it's gone up 250% since April. But now, as I'm telling you, that even though it could go a little higher, largely the risk to reward isn't as favorable. So it needs to come back to get the smart money excited again. Let me talk about another company that's reported earnings tonight, and that is SMCI. These guys were up 285% from their 52-week low to their 52-week high. And so it's just another story about extreme profit making and Wall Street wanting to lock in some of those riches. It broke a bullish structure, which was a descending channel. Those rarely break to the downside, but it did break to the downside. SMCI is closer to its local support. Let's go quickly look at that chart. So we're looking at 12-hour candles, and as this falls, I see support around $39. I would imagine that we would see some sort of a bounce right there. Now, another company that reported earnings today that I think is worth covering, and I have ignored the miners for a very long time, Mara. They reported record earnings. The results marked a sharp turnaround from a $125 million loss a year earlier, helped by 64% increase in hash rate and lower power costs. So this was a huge moment for them. They're part of the AI story now. Bitcoin is alive and well, even though it's come down. I just want to comment. People keep asking me about Bitcoin. They said, should we worry now? When I have said very clearly that I believe that the worry time was the minute it crossed beneath 107. So yes, that's when it was time to worry. And really the only thing that's going to be working right now for crypto is shorts. Now, if you're interested in Mara and buying the dip, strong support at $15.50. Let me know which of these companies you like the most. Hopefully you're picking up that the message is that the markets are rolling over. We've got to expect a little bit more of a pullback. There will be a buy the dip opportunity, but you don't want to buy it too early. And I'll be keeping an eye out for the moment that I think Netflix is a go for the month of November, or if something else comes along that's a bit more attractive. Let me know what your guys' favorite stock play is right now. What's working for you? Let me know in the comments. Peace and blessings. We'll see you in the next video. Let me take a quick station break to tell you about the Moomoo investment app. If you're looking for better trade tools or you just want to get more out of your broker, check out their latest offer. Right now, Moomoo is giving new users up to $1,000 in NVIDIA stock just for making a deposit. And any idle cash you put into the account, you can earn up to 8.1% annual percentage yield for the first few months and 4.1% after that, which is still higher than most banks. This offer is only available for users in the United States and only available for a limited time, so hit the link, check it out on their website, read the fine print, and see for yourself.